Hey, this is Matt from InvestiQuant. Today is Tuesday, August 23, 2022. Yesterday was a big day in the markets on the downside. We had the largest decline that we've had in quite a while, and we'll be looking at a pattern that takes advantage of that piece of information this morning in the Daily IQ. So let me go ahead and get this set up. I'm going to grab all four instruments. The setup will be based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, the overnight session is fairly quiet at the moment. We're trading right around yesterday's closing price. I don't know if we're going to be gapping up or down, but if we continue doing what we're doing right now, we're going to be opening pretty close to the prior day close. So I'm going to use a gap size as a percentage of the 5-day ATR for the opening filter. And I'm going to put in a max gap size of 20% of the 5-day ATR. This can be in either direction. So for the S&P today, that would mean a opening location that is plus or minus about 12 points from yesterday's closing price. All right, the next thing I'm going to do is go to the price patterns library, and I'm going to use that decline pattern that I talked about. So yesterday was the largest decline in at least 10 days. I'm going to grab that from the active today section. If I go down to the bottom here, unique moves, day after largest decline in 10 days. I could go 20, but I want to keep as many samples as possible, so I'm just going to go with 10 here. And then I'm going to go to the indicators library, and I'm going to put us below a 10 and 200-day simple moving average. I got both of those selected there, and now I can click view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you have a flat-like opening, which I'm describing as opening less than 20% of the 5-day ATR away from the prior close. And the prior day was the largest close-to-close decline of the past 10 days, and that took place below a 10 and 200-day simple moving average. Historically, we've got 44 samples in the S&P, 55 in the NASDAQ, 49 in the Dow, 63 in the Russell. Win rates on these are skewed towards the downside, with the S&P coming in at 43% of these closing above the opening print for the session. For the NASDAQ, 45%, for the Dow, 45%, for the Russell, 43%. If we look at the average moves, average loss just a little bit larger than the average win here in the S&P. That's also the case here in the NASDAQ and in the Dow. The Russell is the only one with a larger average win. So historically speaking, all four of these have win rates slightly weak, and 3 of the 4 have slightly larger average losses compared to their average wins. Now, if you have access to the platform, you might want to take this pattern and look at a gap fill setup. There are several variations that can be favorable for fading the gap this morning, and we'll take a look at that in the room as well. So hopefully you found this helpful. Good luck today. We will see you next time.